Welcome to the London Outlook for Wednesday, the 7th of February 2024. Starting off with the economic calendar, as we can see, there's no red folder news events. I think there aren't any until tomorrow. Tomorrow being the last red folder news event. So, for today in particular, there aren't any news events to consider with regards to our trading. So, I'll move on to the daily chart, where we can see that things have actually started to clear up quite nicely. We finally got out of this uncertainty that we were in. I think the thing to note from the daily is just the structural level. It poses a significant target, and once it's reached, we don't know if price will grab the liquidity and reverse, or will it grab the liquidity and continue. So that's just something to take into account when figuring out your targets. However, yesterday as well, we had a day that closed within this large bearish candle, validating the swing low, and as a result, we're out of the ERL continuation state that we were in yesterday, and now we're in a pro-trend confirmed scenario. What this essentially means is that we need 4H backing for any building of primary legs, that being on the 4-hour, 30-minute, 15 or 5-minute. If we look quickly on the 15-minute, we can see that we do have this jock level right here, and the primary leg is being built. So um, perhaps I'll come back to this just in a minute. I just wanted to touch on something on the 4-hour, being the fact that our ERL target is this 4H swing low for today. And then also we've got this 4H OB backing to support the building of a primary leg, and the fact that the pullback phase hasn't yet been validated, and it will be validated once we actually body break this pro-trend confirmed OB. Then moving on to the 15-minute, like I said, there's only reasons to short. So for me personally, I'm paying attention to the building of the primary legs, and then obviously the validation of the Asia high of the day, to confirm that it is indeed holding before I proceed and actually look to find an entry. So the outlook for the London session, just to summarize, is to short, and then also to ensure that your high of the day is validated by one of the sessions, since there's no red folder news, and then the other is ensuring that you're happy that the primary leg is built. Remember, you can move across the time frames, so on the 5-minute it's more clear that we have indeed built the primary leg. However, it's the same on all the time frames, where we've got to wait and validate the high of the day with a session break. And what I mean by a session break is, for us to validate this Asia high of the day, we need Frankfurt to take out this Asia low by a wick or a body. Either will work, and then we can say, okay, it's less likely that this high of the day will be liquidated. So that's just a couple of factors to take into account. Obviously, the 9 a.m. open is the key point. However, until then, we'll wait patiently, wait for the 9 a.m. Frankfurt start, and then assess accordingly if we're going to place any entries. I'd anchor my fib like this, and as you can see, there's a couple of nice POIs that do align. Maybe we can just go through those quickly. So there's that POI. There isn't really a worm right here. From a 30-minute perspective, we haven't yet validated the primary leg, so it's not right to use this entire OB. We can consider using the range, however, it's hard to say that one particular candle is the range, so I'd rather keep it consistent. And then from this point of view, I think whilst there isn't a chain, there does appear to be a supply demand flip we can see right here, which I'll highlight it here. So there's this flip going on right here that we can potentially place our entry in, because this POI is supported by this 38.2% fib level. So lots of reasons to short. We just need the factors that we mentioned to align before we are able to validate this that this Asia high of the day will indeed hold. So, having said all of that, have a good London session and we'll chat again for the New York outlook.